Now that you have read about adjusting journal entries in your textbook, we're going to look at a few examples and apply what we have learned. We're going to use case in point 4-2, record adjusting journal entries. Number 1, on Monday, March 29th, Nathan's Donut School begins an intensive workshop with a group of students. Nathaniel charges $250 for the 5-day workshop, Monday through Friday, and is paid on Friday. The company earns $50 per day, so you're going to take that $250 and divide it by 5 days, which we completed right here. Since the period ended on a Wednesday, Monday, Tuesday, and Wednesday worth of revenue has been earned. So 3 days of revenue is going to be recorded. So 3 times 50 is $150. So now we know the amount. The question is what accounts to use? Well, we know we need to record revenue, and revenue is recorded with a credit to our revenue account. So we'd credit service revenue. And we also need to record the amount the customer is going to pay to us. Now they haven't given us the money, so we're going to record that in an accounts receivable, which is an amount a customer owes to us. So accounts receivable will be debited for $150 and service revenue will be credited for $150. And this is an example of an accrued revenue adjusting journal entry. So this is for revenue earned in advance of payment. We already performed the service. Our customer has not paid us yet. At the end of our accounting period, we would need to go in and make sure this revenue is accounted for on our books.